It has been an absolute bloodbath the last couple days in the stock market, but we're going to go over some ways that you guys can help yourselves so you're not drowning in all of this redness and just dying because everything is completely red. So some things we're going to go over in this video are about diversifying and looking at some charts and how we kind of look at things and basically give you guys our input on what we do to decide, like, you know, what stocks to look into and when we're going to buy and when we're going to sell and stuff like that. So let's just go ahead and hop right into it. So first things first, diversification. Being diversified is probably one of the biggest keys to the stock market, so you're not losing a bunch of money. But for us long-term holders who are looking to hold on to these stocks for 5, 10, 15, 20 years, or however long you're holding them, you want to be diversified. So when there's a red day in the EV sector, or when there's a red day in the financial sector, you have these other sectors that could possibly be green that are going to bring your portfolio up, and it kind of balances itself out. I think that's probably one of the hardest things that it took me forever to learn when learning about the stock market and when getting into, you know, investing. But coming, you know, from where I was at, it's definitely learned a lot. That's for damn sure. I'm gonna tell you that right now. But first things first, let's go ahead and talk about the heat map. So for you guys that don't know, we're gonna just bring over the heat map right now. So the heat map is basically a huge map that brings all the sectors together. It shows you the biggest gainers and losers of all the sectors, and, you know, green is good and red is bad. So we're looking at this heat map on FinViz, and I think this is a really good way to tell you which sectors are doing good, which ones are doing bad, which ones to kind of stay away from, and which ones to buy. You know, because obviously the last couple days we all know tech has been really bad. You know, everything's been pretty red, and you could check, like, you know, the different, you know, want to do a week, you want to do a month, 3 months, 6 months, year. You can kind of check all of that. If we go over, we'll just look at a week real quick. Look at the last week in the stock market. Like, this clearly tells me that tech is no. Like right now, tech is not a good thing to be in right now. But you look at other things like energy and household and healthcare, like those are all green. So that tells me like that sector in this market right now is doing really good. And we can even go out a little bit farther, so we're not just looking like trying to be biased, but like this is a month out. And it got even worse. Like, just looking at, like, the last month, it's clearly worse.
Yeah, so as you can see, you know, if you're in mainly tech, the last 3 months, you're just drowning, probably down, I don't know, 20, 30% in some stocks. But if, you know, if you're diversified in, you know, pretty much any other sector besides tech and, you know, communication services and stuff like that, like, you would be perfectly fine right now.
Right.
Because everything else is green.
I think a lot of the tech has to do with the chip shortage. You know, you got Apple, you have Microsoft, you have Google, Amazon, Tesla, like Neo,
yeah,
AMD.
I mean, a lot of people, the last couple of days, a lot of people were selling out of tech to get into other things as well. Yeah. There's always like this shift in and out of tech, so that always hurts tech. But yeah, tech is usually the main one you want to kind of be in because it has like the highest growth, but you just don't want to put all your money into one little basket.
Right, exactly. I mean, I agree with that because, you know, like I said, if you're in in tech and things like this come up where there's a chip shortage, like, you're going to lose a lot because a lot of these companies rely on that stuff. So it's going to hurt a lot. And so let's go ahead now, since we know, like, we're going to look, you know, hey, maybe, you know, let's look at the energy sector. Let's look at the financial sector. Let's look at the healthcare. Like, this gives you a broad idea of what to look for. And then you can start fine tuning, looking for stocks in that, you know, in that sector that will help you, you know, help you kind of pick which stocks you want to choose, which ones you want to stay away from, and go from there. So let's do we'll do a financial one, for example. And we brought up Wells Fargo. So Wells Fargo has been doing fantastic throughout this whole entire pandemic, and even through the chip shortage, because they're not really dealing with chips, they're in financials. Like, that's what they're dealing with.
Yeah. And rising inflation rates and everything is actually good for banks. So
right.
The past 6 months, they're up like 92%.
Yeah. I mean, you can clearly see this. Like, everybody, so from like the tech sector kind of started selling off in like January or February, and look at February from, you know, of this year for Wells Fargo. It's nothing but up.
Right.
And it's like the tech sector is going down.
Yeah, you look at anything in tech and it's just straight down.
Right.
So, yeah.
And it's not good. It's not good. But we use these, so stockcharts.com is our go-to for stocks when we're looking to enter or exit a stock. We've shown this multiple times on this channel, with NEO, because what's what we talk about a lot on this channel is NEO. We've looked at, how it just basically tells us how much, when to buy, when to sell based on us, looking at the chart. So the RSI, the relative strength index, basically tells us whether a stock is overbought or oversold. And that right now is normally you want to see this around the 50 range, which is kind of like that happy median. It's right where you want to see it. But with Wells Fargo, inflation rates, like you just said, Chad, going up, a bunch of people buying into it. It's been going up. Didn't you say it was up like 90%? You said it was 90% or so in the last 6 months?
Yeah, in the last 6 months.
Yeah. So it's obviously been going up like crazy, and it's showing no signs of slowing down because it's been hanging up there for quite a while. And normally you see it pull back when it's up there.
Yeah, for these kind of things, this is a stock that I would just get in and I'm just holding it for a long time, just to be help me get into other sectors. So
right.
Yeah.
I mean, that makes sense. But we're well above, it's well above the 50-day moving average. And then the full STO, again, it's kind of mimicking the RSI. So it's staying up towards the top, up towards that $80 range. And then, so you have your financials covered. And then you might have a little bit of tech because everybody has tech. Everybody owns Apple. Everyone owns, majority own, Apple, Tesla, Microsoft, those bigger companies that are a little bit more safe to invest in. And then you can go to, your energy sector and get into energy and home and stuff like that. And, again, energy, we're looking at MPC, an oil company, big oil company. And they were kind of hurt at first during the pandemic. So that was kind of stuff you wanted to stay clear from because of the fact that, everything shut down. So it made sense to sell out of it and then, put that somewhere else. But now that things are starting to open back up, things are starting to pick up, we're starting to see this chart, through the roof. Again, on the RSI back up towards the top, and then we're still above the 50-day moving average as well.
Just different things going on in the economy might hurt one sector, but it's going to help another sector. So that's
right.
That's why you just got to be in kind of a lot of different things. Like today, a lot of my tech, well, not a lot, but some of my tech and some other sectors were up good, but my Wells Fargo was down. But since I'm pretty decently diversified, I finished positive for the day in my portfolio, which I was surprised because today was pre-market was pretty rough. But that's just an example of why you get into other sectors because all your tech could be down, but other sectors could be up in your portfolio, and that's what saves you that day and to end up being green.
And I know a lot of people like us who are in, a lot of stocks long term. You also have to think about things like you just said. Some things might come along that end up hurting a sector, such as the chip shortage. So, yes, you might be a long-term player, and let's say Apple, let's say you're a long-term player in Apple and you see fantastic growth out of them. They've been stuck at like the 140, 150 range for the last 6-7 months now. Like it really hasn't moved. So it's like, yes, you might be long-term in them, but it may not hurt. And this is not financial advice. Everything we're saying here is entertainment purposes only. So do what is best for you and your portfolio. But it may not hurt to take that money out of Apple, put it in Wells Fargo for 6 months while Wells Fargo's growing, Apple's hurting, and then when everything turns back around and the whole shift changes and everybody starts going back into tech, that's when you take maybe get rid of your Wells Fargo because it's going to start going down or something, and then just throw it back into Apple and then let it grow. I think a lot of people are scared to take profits and then they end up losing money because I feel like there's a stigma on the market like, oh, diamond hands or you got paper hands, like you're soft, like just hold, just keep holding. But that's how you end up losing money too,
Right. I personally wouldn't say sell all of your Apple. I would sell maybe just a little bit of it and put it in Wells Fargo. But for me, the whole point of being diversified is to be diversified before something actually happens. So you're already covered. You don't have to actually do anything. You're already good to go. But yeah, because for me, you don't want to sell everything because then you don't know when Apple could just blast off and then you're late to the party when you already could have had some of your money in there. So,
yep. But I guess my point was shifting things around. Don't be afraid to shift, move your money around a little bit, and to make that money work for you, so you don't have to, long
especially
in the future.
With what's It's exactly that's the whole goal here. But yeah, I mean, especially with what's going on in the market right now, it's been going on for months. Like it's kind of. It's kind of dumb just to sit there and hold on to all your tech stocks and just watch you go down 40% when you could move out a little bit of money and take some profits at least while you still got them, if you have profits, and put it into something that's been going up, because we've been in this since February, and I don't think we're gonna have any change until the end of summer. So you might as well put some money into stocks that are actually going up. Or if you don't really know what individual stocks you want to get into, you can always just get into the like a Dow ETF. That's what I'm in, like the eDow, which is a Dow ETF. It just it's in kind of everything in the market, but it's been going steadily up since the whole market correction or crash, whatever you want to call it at this point, since mid-February. It's been going up steadily. The Dow hit all-time highs like 2 days ago.
Right.
And also another good one you could get into, if you don't really want to spend the time researching individual stocks, or like I said, you don't really know exactly what to get into. You could just, also get into the S&P 500. If you look at that chart, it's just been going steadily up as well. So just some other options you could get into. Just easy way to get diversified.
Exactly. Yeah, I think the tech sector is going to be hurting for quite some time. I think we're going to have this chip shortage through, towards the end of the year, end of quarter 3, quarter 4. It's going to be a long time before tech recovers, and hopefully, it's better, because the whole stock, it's just, everything is garbage. I feel like everything gets garbage when one sector is really bad. But there's only one way to find out, and that's just to wait. But if you guys like this kind of content, hit that like, share, notification bell, all that good stuff. It really helps support the channel. And we got links down in the description for Webull if you guys want to sign up for that. It gets you 2 free stocks valued up to $1,800 when you deposit $100. And we also got a link down there for the merchandise if you guys are interested in that. And we also have a link down there for the Patreon that gets you into our Discord, which gives you access to our portfolio, and it gives you access to the Discord portfolio, where the members get to choose which stocks to put into the portfolio, and we let it ride through the whole year. But again, thank you guys for all your support, and we'll see you guys in the next video.